Welcome everyone to our inheritance tax reporting webinar. My name is Riley Sigler. I am in the Education and Community Engagement Specialist at NACO, and I'm excited to welcome Debra Williams from the Nebraska Department of Revenue, here today to review the inheritance tax reporting legislative changes and updated reporting forms. I will note that this webinar is being recorded, and we hope to have the recording up on our education website, on the NACO website. So if you haven't checked out those educational resources, that'll be uploaded there when we are completed with the webinar. With that, I'll go ahead and pass it over to Debra to get started. Thank you, Debra. We appreciate you being here.
Absolutely. Thank you, Riley, and thank you to NACO for organizing this event. Thank you to everyone who is attending and is taking time out of their day to join this webinar. I hope you find it valuable, and as questions come up, that we can supply answers to those. And if there's an answer or a question that comes up that we need to think about and bounce off teammates here at the department, rest assured that we'll be sure to get those answers to you quickly after the fact. But with that, we'll go ahead and get started this morning. Assuming, there we go. Always a good thing when the first slide advances. But this, of course, is the department's standard disclaimer with the key thing that everything that we share today is accurate as of today. So moving forward, things are subject to change, but as of today, all this information is binding on the department. Okay. So to start off, we all know where we've been with this particular legislation. Came about last year and manifested in Nebraska Revised Statute 77/2015. Well intended, but left certainly something to be desired in the way of clarification. So this year, LB 97 was introduced. And at the last ring-a-ding-ding of the legislative bell, LB 97 with a few changes got incorporated to, of course, the big bill LB 727. So the new amended changes can be found in section 57, and they are also, of course, available on the legislature's website. As you can see here today, I poked into the website, and they do have the new changes up to date and posted. So what you see on the legislature's website is the new legislative language. Today, of course, we'll go through the important things of the new report due dates and reporting periods, the logistics and the forms, as well as some other LB 727 changes having to do with inheritance tax reporting. So with that, we'll go ahead and move on. So these changes are for 2023 inheritance tax reporting. So our new due date, instead of being due on July 1st, is August 1st of this year. So we have a nice cushion of a month to get this information together and to us here at the department. In addition, for this year only, 2023, the new reporting period is from January 1st of 2023 through June 30th, 2023. Previously that had been a question that had been asked a lot, and the legislature went ahead and answered that question for 2023 with these dates. So, of course, August 1st coming up in a month, and then we are just about to the end of the 2023 reporting period on June 30th. So that's the new reporting due date and reporting period for 2023. After 2023, we will see that we will continue to have that August 1st report due date for 2024 and each year after. So easy date to keep in mind occurring right at the first of the month of August. And then moving forward, that reporting period begins on July 1st and goes through the 30th. And that's every year after 2023, basically on the fiscal year, if you will, is where that reporting period falls. So that's the new report due dates and reporting period for each year after 2023. Okay. So logistics, being with the department, enjoy a good form. And hopefully these forms will make things easier for treasurer offices as we compile information and answer questions from those that are required to submit forms. So the first form that we have done to comply with this new legislation or revised is, of course, the form CIT. So I'll go ahead and bring that up just so you can see it. So this is an Excel form, of course, and this will be the one that U.S. county treasurers will fill out and bring or submit electronically through pat.reports@nebraska.gov to us at the department. So we'll talk through a few of the minor changes that we've added to this form in just a moment. That's form CIT. And then, of course, we have a slight name change on the other form, which used to be the estate county inheritance tax form. Because of the legislation change, we are now calling that simply the petitioner county inheritance tax form, or form PCIT. Of course, the legislation was crafted in such a way to capture anytime a inheritance tax determination is required or an order entered to determine inheritance tax. We're expanding that net and we're capturing that information. And so instead of just estates, we're expanding it to petitioners or any time inheritance tax is due. And with that, I'll give you a quick glance at that. And you'll see a lot of similarity between the ECIT and the PCIT. Looks very familiar. Hopefully just a more user-friendly and with more clarifications in the instructions. You'll note that petitioner signature is required, of course, and petitioner is defined down here. Includes, but not limited to traditional estate, like we were dealing with before. Personal representatives, administrator, executors of those probated estates. Those are still included, but now more explicitly, by using the word petitioner, we're also capturing people who are trustees of trust, filers for affidavits for transfer of real property without probate, and of course, beneficiaries of those transfer on death deeds, all of which may require inheritance tax determinations to be filed and be paid in the end. So again, this legislation is just more explicitly expansive to capture all those different situations. Okay, with that, we'll move on. Before I do, I just want to again just highlight the fact that the form CIT, once completed and signed, again, can be emailed to us at the department at pat.reports@nebraska.gov. We will have teammates, of course, monitoring that email and capturing those reports for a department report, which is due September 1st. We'll talk about that a little bit later, but just know that as those reports are reviewed and compiled, that department teammates may be reaching out back to you if they have any questions or need any points of clarifications answered. Okay. So as we just saw on the form CIT, I do just want to point out a change on that form to hopefully aid in the process of starting things with a clear understanding of where these numbers come from. So, of course, as previously with the prior forms, we have columns and we have different classes of beneficiaries. So the first one, a total number of Nebraska resident beneficiaries for classes 1, 2, and 3. Same for non-resident beneficiaries. Total resident beneficiary inheritance tax paid to all counties. So those pay inheritance taxes paid to residents for all counties. And then we have total inheritance tax paid to all counties combined of residents and non-residents. So those columns should look very familiar to you. The new column E, is total inheritance tax paid to this county. So to back up, just like the prior legislation where this form was to be filed in the county where the estate was administered, here we're setting it up in very much a parallel fashion, but now the form PCIT will be filed with the county treasurer's office, where the order is entered from the court that determines the inheritance tax. So again, you can still have multiple counties included in this form CIT as far as where the inheritance tax is being paid to, but we're still asking just one form PCIT to be filed where that court order is being entered that determines the inheritance tax. So as I said, columns A through D should look very familiar to you from our previous form, but this new one is reflective of the inheritance tax that actually the proceeds that are received by your county. So you can see it here that rows 1, 2, and 3 are grayed out under this column, and the only place that you can enter a number is row 4 under the total. So here we're not asking for anything to be broken out by classes of beneficiaries. We're simply asking for, during the applicable reporting period, how much money did your county receive in inheritance tax proceeds? And so again, column E is calculated totally independent of columns A through D. But just another way to get good information from this form while we are gathering the information in columns A through D. So if there's any clarification that needs to be had with that, please feel free to ask. But again, we're just asking for just one number here. How much money has your county received during the applicable reporting period in inheritance tax revenue? Okay, so moving forward, we'll go through the more nuanced changes that 727 brought about. So as I was speaking to earlier, here the triggering action that requires the form PCIT to be filed with the county treasurer is the entry of an order determining inheritance tax. As we've already talked about and alluded to, this does not have to be in conjunction with a probate action, but it can be done as a standalone petition to determine the inheritance tax for non-probate assets, such as transfer on death deeds, transfer of real estate without probate, and of course, those trust distributions would all come underneath the heading of transfers of non-probate assets. But of course, we still need to have inheritance tax determined on those transfers. The other change is now you will see, reading through the legislation and through the statute, of course, now that it's published, that the form PCIT is now required to be used by petitioners when they file with your office. Before we developed the form ECIT as a helpful service to those filing that information with your office, but now that is required to be used. Know that we have received before some questions from practitioners out there of whether their clients' information was properly captured by the form or properly required by the legislation. With these changes, the net, so to speak, is cast wide, and it eliminates that question of whether transfer of assets that are subject to inheritance tax, whether they have to report and how to report those transfers. So those are some of the couple of changes that LB 727 has brought. And then moving forward, our other changes. So first of all, counting of the residents and non-residents. To be included in the count of residents and non-residents, an individual must receive property that is subject to inheritance tax and on which inheritance tax was assessed. So this means that if an individual receives property that is subject to inheritance tax, but their personal exclusion, whether it be, or excuse me, not exclusion, but exemption, as a class 1, 2, or 3 beneficiary covers the value of the property that they receive, that tax is not due, so it's not paid, not assessed, and that individual is not included in the count of residents and non-residents. So something to just be aware of as you get those inevitable questions from petitioners, practitioners. If a person is essentially not paying the inheritance tax, they are not included for purposes of this new legislation in the count of residents and non-residents. Okay. And last but definitely not least, responsibility of the county treasurer. So in an ideal world, of course, everybody who has to go through the process to determine inheritance tax would automatically know that the form PCIT is a mandatory part of that process, and would properly file it with their county treasurer's office, no questions asked. And moving forward, as awareness spreads, we hope that we get to that point sooner rather than later, certainly. But in the meantime, while that awareness is still spreading amongst petitioners and to some practitioners, we ask that county treasurers play especially an instrumental role in making sure that all the inheritance taxes generated in their county, all the orders that are entered in their county, that a form PCIT is entered for those matters, and that you work especially closely with your county attorney to make sure that information is properly conveyed to your office. And of course, form PCIT will be helpful in compiling the report form CIT. But again, it is the responsibility, is your responsibility as county treasurer to make sure that information, as mandated by the legislation, makes it into your form CIT, and therefore makes it to us at the department. So happy to answer any questions on that. But again, here, a good working relationship with your county attorney will be especially useful, as of course, county attorney is a key player in the inheritance tax process. They need to sign off on all those worksheets before the court goes ahead and enters the final order. So they should be very well equipped to help you get that information. Okay. And then we're, of course, spent a lot of time talking about the forms PCIT, the form CIT that need to be submitted to your treasurer's office, and then form CIT coming to us at the department. We have a responsibility too, as mandated by this new legislation. And that is that we will compile, aggregate, and publish the reports of the county treasurers on our website on or before September 1st, 2023. So know that there is an end result to all the hard work that you're putting in at the county level. And that is the publishing of this report that'll be available on our website to the public regarding inheritance taxes paid. Okay. So a couple of questions that I've already received, and I thought I would just take the liberty to share with the larger group is, first question is, are penalties and interest amounts for the form, for inheritance tax also reported on the form CIT? The answer is no. They are not included. The legislation and now statute does not address penalties and interests. So for the purposes of reporting inheritance taxes, penalties and interest are excluded. So that's the first question I've received. And then this next question I've received a couple different times in a little bit different ways, but essentially the question is, if we receive tentative inheritance taxes paid, are those paid taxes reported in the year that we receive the tax or in the year that the final order was received? So backing up and examining the inheritance tax process, as you likely know, there are two different orders filed in this situation. The order from the court for tentative inheritance tax, and then of course the final order for inheritance tax to be paid. Both of those orders do trigger the filing of the form PCIT, because they meet that description of an entry of a court order regarding inheritance tax. And so how we're answering this is that when an order for tentative inheritance tax is entered, the form PCIT should be filed by the petitioner to reflect tentative amounts paid. So at that point, we receive our first of two forms PCIT. And the first form will be filled out as you would expect it to be, with the different classes of beneficiaries broken out and those amounts paid to residents and non-residents, as we've talked about today. If a final order is entered that increases or decreases the inheritance taxes or that have already been paid, what will need to happen is an amended form PCIT should be filed, reflecting the additional taxes paid or refunds issued by the county. Here, we don't want to double count the number of individuals. So columns A and B regarding residents and non-residents receiving the property transferred on which the inheritance tax is being assessed, those should likely be left blank. Now, the only exception to that would be if the initial or the tentative inheritance tax did not account for an individual who should properly receive property and that is subject to inheritance tax and on which inheritance tax was assessed. In that case, that additional person or persons would need to be included in columns A and B. But generally speaking, for an amended form PCIT, those columns A and B will be left blank. Okay, so that is the short and skinny, if you will, on those changes that are now codified in 77-2015. If there are any questions, would be happy to answer those. And if there's anything that needs going over and need more clarification, happy to do that as well. Wanted to get through this information so we would have plenty of time for questions. So, Riley, do we have any questions?
Well, I'm just trying. Do you guys have capabilities? I'm not sure if they have capabilities for the chat right now, which is,
Oh,
I'm not entirely sure, but okay. If you, let's just raise your hand and then I will allow you to talk. We'll do that.
sounds great.
All right. Barbara? You're
Hi,
on?
Barbara. Barbara, do you, Barbara
You have a
may
question?
not have a mic.
Okay, I'm gonna try to figure out why the chat's not on for everyone.
I appreciate the confidence that you had in me.
Now, is the chat on now? Denise can chat with. Yes,
Hey,
okay,
yes.
okay. Thanks
Wonderful.
for your patience, guys. Okay, add your questions to the chat. And we will try to get to them. Okay, what determines the tax year of the inheritance tax?
Good question. The tax year of the inheritance tax is determined by when the order is entered, since that is our triggering action by the court, that that entry of the order that determines inheritance tax. Whenever date that order is entered, that that specifies what reporting period those forms should be reported for. Very good question.
There's a question regarding the definition of resident and non-resident.
Sure. Okay. I guess not to get too dig too far deep, and if you have more specific questions that I can flesh out regarding this, please go ahead and ask. But residents, those who call their primary domicile or primary residence home in Nebraska. Of course, especially now, people, you know, especially if you're lucky enough to escape these lovely Nebraska winters that we have, people, you know, will have a residence in Nebraska, residence down south, but wherever they would, for legal purposes, call their primary residence, that is where that's the state where they're a resident of. So, for example, if I'm a quote unquote snowbird, and I spend 9 months in Nebraska, but I spend those 3 frigid months someplace down south, I have residence in both places, but my primary residence would be in Nebraska. And then likewise, if primary residence is outside of Nebraska, those individuals would be our non-residents for inheritance tax reporting purposes.
Another question said, you said the PCIT form is required to be used. Does this mean the petitioner is required to file the form, or just if they give us a form, it has to be this DOR form?
So yes, so statute required us to make a form, and that form is then required to be used by the petitioner. So, and actually it's both. They are required to use the form and they're required to file the form. So, and then when they file this information, it's this form that they're supposed to be using. So the answer to both of your questions is yes.
Does the date of death matter anymore?
No. Date of death really matters in situations where you might be more likely to have to go through the amended CIT, or excuse me, the amended PCIT process for those estates where that's taking longer than a year to settle and to get those inheritance taxes paid. If data death has been over a year ago and we're still yet to figure out who gets what, in those cases, you're more likely to have that tentative inheritance tax paid and have to go through that amended PCIT process at a later date. That's really where the date of death matters in these situations.
If we have collected information on the old form, do the petitioners have to redo the information on the new PCIT?
No. So, well, I should say it depends on what the date is of the old form. So this legislation was subject to an emergency clause. So the governor signed it on June 6th. So after that time, ideally, we would like to see it on the new form, but understandably, because it takes a little while for everybody to adjust to the new legislation, get forms reviewed, revised. I would say that if the old form has the information sufficient for you to submit the form CIT, a new form would be ideal. But if it's hard for you as the county treasurer to get that information, we just ask that you do the best you can with the information that you have. Again, a new form is technically required because of the effective date of the legislation, but is not required if you have old forms that are after June 6th.
Will you be sending anything out to the county court clerk's office? And will there be specific amended form, or will they just write the word amended someplace on the PCIT form?
Yeah, so when we came up with this process, it was envisioned as one where the petitioner would just write amended on top. However, if there is that need or that request for an amended form, that is something certainly we can consider coming out with, and I want to say to make it something where you don't have to write amended. But for now, we anticipate that there's hopefully not that many of them where amended can just be written on the form PCIT. Good question.
Can we accept the PCIT form completed but unsigned?
No, it must be signed as a part of accepting that. And that's very clear. So if you get the form in, but it's as of yet not signed, please do due diligence in reaching out to the person that should have signed it to ask them to sign it, or working with your county attorney to make that connection, make that contact happen, because it does need to be signed and dated.
Should we accept inheritance tax money if we do not receive the PCIT form?
I would say that because the form PCIT is required by law, explicitly required by law, I would say that it is best practice to accept the funds along with the form. It probably is the best leverage that you have to require the form to be filed when accepting those funds. The legislation does not have sticks or carrots, if you will, to otherwise motivate petitioners to file the form if they are not aware or are resistant to doing so. So I would suggest accepting the funds, but requiring on contacting and working with your county attorney to make sure a form PCIT is properly filed.
Does the PCIT replace the ECIT?
Good clarifying question. It absolutely does. That new form PCIT replaces the form ECIT. The form PCIT is now the operative form for this.
Question about, will you send this presentation out so we can keep a copy? We'll have this presentation on the NACO education resources on our website. And then treasurers, we are still hoping to have a credit hour approved for this webinar. So if that comes through, you'll see that on your learning management system, their credit under the external learning tab. Okay, back to questions. To tag on to Chris's question, do we not accept payment without a PCI form? I think you already touched on that a little bit. What if the petitioner will not return the PCIT form?
Again, I'll refer you to working with your county attorney to complete due diligence in trying to get the petitioner to complete that form. Of course, there is other means for getting this information from the case, especially if it is a traditional probated case. Of course, the inheritance tax worksheet, other documents filed with the court. But even so, at some point, those documents have to come to your county attorney, and he or she will need to sign off on those. So I guess there's more than one way to get at the information that is supplied on the form PCIT, and your county attorney would be your best resource for obtaining that information if you have a petitioner that absolutely refuses to refile. And in that case, they're not following the law, and there's a few other, again, no sticks or carrots, but that's the emphasis that you can certainly lay out to somebody who's resistance, is that this is absolutely mandated by law, and then work with your county attorney to get that information if it's not voluntarily supplied.
If you think the form has been completed incorrectly, what is the responsibility there?
I would say again, I know I will sound like a broken record here pretty soon, but to reach out to your county attorney. It could be just somebody who is going through this process pro se, perhaps, and not represented by an attorney who's just trying to do what they're required to do. County attorney should be working with them, reviewing the inheritance tax worksheets and other documents to ensure that the proper amount of tax is being paid. And as a corresponding matter, they should have the correct information to fill out this worksheet. If they filled the form PCIT, excuse me, but if they filled out the other documentation, if they filled out the inheritance tax worksheet already, and at least gone through those parallel steps to do their own version of it, they should be comfortable to fill out the form PCIT. But in that case, where you have suspicions where things are not filled out correctly, first step would be to reach out and inquire of your county attorney what they know of this matter.
This might be hopefully I get this correct. If no probate and deed is filed in the Register of Deeds transferring property, the treasurer's office does not see transfer until November, December. How do we have the PCIT filed or required when transfer on death deed is recorded?
Okay. Let me just read that real quick. Okay, so if no probate and deed is being filed, okay. And yep, transferring property, the transfer's office does not see the transfer until November, December. How do we have the PIC filed or required when transfer on death deed is recorded? So I think this question, and Mary, please correct me if I'm interpreting this incorrectly. I think the gist of this question is a timing question. Where you have the deed or transfer on death deed actually making that transfer at one point, and you have the form PCIT being required to be filed at another point, I think is the gist of this question. So again, non-probate property, such as transfer on death deeds, still subject to inheritance tax. Although, again, as we were talking about earlier, if that person's exemption amount covers the value of the property that is being transferred and they do not owe inheritance tax, then the form PCIT is not required to be filed because of that new explicit language, subject to inheritance tax and property on which the inheritance tax was assessed. So properly going through the natural steps of how this should work, when the order is entered, following that is when the trigger is activated for the form PCIT to happen, even if that person does not take a death certificate to the Register of Deeds and activates that transfer on death deed until months later. The form PCIT is still due when that order is entered. I hope that answers your question, Mary. If not, feel free to put a follow-up question or two in the chat.
If we collected tentative inheritance last year and this year there was a tentative inheritance tax overpayment, is a PCIT form required for this year?
Yes, I think what you're regarding, it would be another order entered by the court saying that the first year's tentative inheritance tax payment was too much, and now they would be ordering the county to issue refunds. And again, if those are in two separate reporting periods, that is okay. But in that case, we need to do an amended form PCIT, which would be reflected in the second form CIT reporting period.
Looks like we just have a few more. Is there retention on these forms, and can the attorney sign the form?
Sure. So retention, I believe, refer to your standard county retention policy, but I believe the retention period for most forms of this nature would be 5 years. So I would first refer you to your retention policy, but I believe that would be the period that you would want to retain these forms for. And then as for can the attorney sign the form, with all things regarding where an individual properly has legal representation, different attorneys will handle this a different way, and some attorneys will take the position that because they represent their client, they are properly authorized to sign the form. I would say that if you have attorneys that are signing the form on behalf of their clients, and this is something certainly I might want to clarify with my teammates and discuss, but the courts will certainly accept documents signed by attorneys on behalf of the clients, assuming that a proper client-attorney agreement has been made and it covers these kind of matters. And so I would accept them if they're signed by the attorney. And like I said, if we come to a different conclusion, certainly we'll let you know. Best practice for attorneys, and when I practice, is I would always have my clients sign these forms personally. And that's something I did not sign on their behalf. That's best practice, but yes, you can accept form PCITs that are signed by the attorney unless you hear otherwise. Okay. Let's see, I see one from Debbie. So if we're unable to receive a PCIT form but have received the funds, are those funds reported on the CIT? Yes, they should be, except that it'll be challenging to properly report those funds. Just because you won't have the beneficiary class information to know what amounts to put in what rows on the form CIT. It becomes a simpler matter for that form E that we were talking about, where If you receive those funds into your county, then those forms are just simply reflected in column E. But again, you'll need to follow up with your county attorney to see if you can get information as to what dollar amounts fall in what rows regarding class 1, 2, and 3 beneficiaries. And perhaps, maybe you only have one class 1 beneficiary and it's very straight and simple. But regardless, would reach out to your county attorney and get more information about the matter.
Let's see. So any inheritance tax collected after June 6th should have a PCIT form. But we don't have to go back and collect them before that date.
My stance standing here right now is no. Again, it would be ideal if they would be willing to fill out a new form PCIT, but my stance standing here today is no. But again, I know Kathy Gussman from the Property Assessment Division, she's on with me, and we will make sure that we get these questions down. And this may be one of those questions that we follow up with NACO and let you know if we have other thoughts regarding how this situation should be handled. But for right now, I'm going to say no, but that's subject to change.
If not required because falls within exemption amount, is it possible to submit with $0? So no, for reporting purposes not needed for that one.
Okay.
Yeah.
Gotcha. Okay. Yeah. So if you have a beneficiary of a estate transfer, or excuse me, a property transfer, and their exemption amount covers what they otherwise would have had, covers the value on which they otherwise would have had to pay inheritance tax, so that at the end of the day, they're owing $0. They are not required to file this form because, again, while the property was subject to inheritance tax, no inheritance tax was actually assessed on the property because of their exemption amount covered that value. Good question, and that's one that we've had before. And I'll just do my standard blanket disclaimer is that as we're working through these and we're getting questions, should anything that we've talked about today, should anything change in how we're interpreting it, or anything of that nature occur, I'll be in touch with Riley and let her know. But as of today, no, should not be required to fill out this form because, again, there's no inheritance tax paid due. Subject, and assess, those two requirements don't apply in that case. Good question.
Do attorneys and PRs have to send in a PCIT to revenue?
No, no, that is where your county, you as county treasurers come in. You are the conduit for that information being compiled on the form CIT and then reaching us here at the department. So there's no responsibility or obligation for them to file the form PCIT with us at the department, only with you as the county treasurer.
And then when is the PCIT form going to be on the website?
It is on the website right now. And while I have that question, let me navigate to, there we go. There's my browser. So if you go to our website, revenue.nebraska.gov, of course, and you can just go to PAD, Paul Apple David /PAD. Go to the bottom of the page where you see forms, and then under County Inheritance Tax Report Form, you will see these forms linked here, the CIT and the PCIT. they are both there for petitioners to pull the PCIT and of course, you as county treasurers to use the form CIT.
Every inheritance tax we've taken since January 1st needs to be included in the CIT, even if we didn't get the PCIT form with it, question mark?
Correct, yep, because the legislation does specify specifically that that's the reporting form for this first report that will be filed with us at the department on the form CIT. Everything from January 1st, 2023 through June 30th, 2023. Even if you don't have the appropriate, the ideal form PCIT accompanying it, go ahead and include that information on this first report.
I think that's all the questions that I see.
I think that's all I see as well. I do see one from, we feel like it would be best practice to make it required for the PCIT form to be part of the filing of the inheritance tax order worksheet, since the trigger activation date is now the entry of the order. No, that is top of mind for myself, is to reach out to the state bar to hopefully ask them or work with them to integrate this form as you see it now in its Excel form into their inheritance tax worksheet, to make it easier for practitioners to just simply, since that information will automatically be auto-filled as they're filling out the worksheet anyway, to be just a simple matter of clicking print, having their client sign, and submitting that to the county treasurer's office. So that change is in the works. Don't have any specific details regarding when that might come to fruition, but that's certainly in the planning stages at this point.
Like we're getting a few more. I'll read through. If we don't have the PCIT, how are we supposed to complete the CIT? Or when a petitioner comes to the counter to pay the inheritance tax and they do not have the PCIT, can we print it out and have them fill out, or does it need to be filled out with an attorney or court?
Yeah, you can go ahead and be full service, have them have it printed out, have them go ahead and fill it out and sign it. It does not need to be filed with the county attorney or the court. These are two separate but parallel processes that we're working through. The filing of the form PCIT, I would say, is naturally supported by the process that involves the county attorney and the court. Of course, the court begins this whole process with the entering of the order determining inheritance tax, but the forms themselves do not need to have that crossover with the county attorney or the court. So yes, feel free to go ahead, print it out, have them fill it out, and then you can have it and have the whole thing completed. Very good point.
Is the entry date the same as the date the judge signs the order?
It should be, yes. In most cases, they'll be close enough that it won't matter as in terms of which reporting period it goes on. Should you have a case where it does matter, let us know and we can give you more guidance. But usually they are on the same date. Has been my experience that when the judge signs the order, the attorney will be able to see it, for example, on justice the same date as being entered into the system.
I think there's a question. Was that you do have to report everything that we have collected, even if we do not.
Hey, Riley, you're breaking out just a little bit on my end. I don't know if that, if anybody else is experiencing that.
Okay.
Now I can hear you. Yes.
All right, shoot. I was just saying that there's a clarifying question here, was that we do have to report everything that we have collected, even if we do not have the PCIT and ECIT forms, just to clarify.
That is correct. That is correct. And I think what they're getting to is to the column on the form CIT, that column E, that total that we're requesting that U.S. Treasurers enter. Those are just any of the proceeds, the revenue that your county has collected during the applicable reporting period that can find a home there in column E on the form CIT. And as to the other part of your question, yes, even if you don't have the form PCIT, as for filling out the other part of the form CIT, that is something that you'll, again, if you don't have the form PCIT, best suggestion that I have is reach out to your county attorney to try to get some clarification on that, because you won't have the needed information regarding which class of beneficiaries those inheritance taxes were assessed on. But we do want that information as well.
All right, if they fill out the PCIT form out here and we don't have an order dictating class of beneficiary, do we take their word that they have it filled out correctly? If once we obtain the court document stating class of beneficiary and the petitioner filled it out wrong, we then just correct the form and write amended on it, correct?
What I would do at that situation is contact the petitioner and ask them to file a new form with your office. I do not advise county officials to go ahead and correct forms that have to be signed and dated by individuals, especially under the penalties of law. So best practice in that situation, reach out to the petitioner, ask them, note that you have found an error with the form, and ask them to go ahead and submit a new form. Careful with, just as a general note, nothing that any of you on this webinar need reminding of, but just be careful of advising how to fill out this form, because of course, applying the law to the facts of a situation can be seen as legal advice. If they have any questions, I would ask them to reach out to their attorney, of course, would be the first best stop. If they have one, if they don't, I would direct them at that point to the county attorney if they have questions. But I would not, as a county treasurer, amend that form myself. I would just ask that a new one be filed with the correct information.
And it looks like we have time for one more. Many times we receive payments for inheritance tax in the next reporting period after the order is filed, basically a much later date. Is column E purely the collections of inheritance tax for the period reporting on?
That is correct. Yes, whenever you receive those monies, the date in which you receive those can correlate directly to the reporting period, because you won't necessarily have the information to correlate those monies to as far as a court order goes. It's just purely the monies that you're receiving when you receive those monies. Correct. And again, something that we need to perhaps think about, but at this point in time, I can't think of any way where you as the county treasurer would have the information needed to correlate those monies back to a certain particular court order entered. To find it a different reporting period, find those monies correlated to a different reporting period than the one in which you receive the monies. So, so yes, purely what the monies are that you received when you received them.
And lastly, if our attendees have questions later, who can they contact at the Department of Revenue?
You can go ahead and contact me. My contact information is on the screen. Should you get a few months down the road and be like, well, we had that one presentation on this from that one person at the department, feel free to reach out to NACO. They'll more than happy to give you my contact information. Sometimes with inheritance tax questions, I'm finding that emails are better to get the factual situation that you're dealing with than phone calls, but certainly feel free to call or email me, whatever works easiest for you, and we will make sure that we get you an answer to your question, especially since this is a whole new so to speak ballpark for us all. We'll figure out, and we will try to get best practices, best guidance, FAQs if necessary out there as they come up, and make sure that we're sharing the information as much as possible so everybody's on the same page with inheritance tax reporting moving forward. Awesome.
Well, thank you, Deborah. Really appreciate you coming here and sharing us your information and filtering through those questions. Like I said, we will have this up on our education catalog on the NACO website. So if you want to refer back to it, and yeah, thanks so much for joining us, everyone.
Absolutely. Thank you, Riley. And thank you to NACO for organizing this, putting this together. And thank you to everyone who joined this webinar today. I hope you found it valuable and helpful moving forward. And have a great rest of your summer, everyone. And a happy and safe 4th of July.